All right. Hey, everyone. Mark here. Thanks for joining me for another Greenbridge Investing Market Analysis. If you're new to the channel, please share your symbol or your market that you would like to see in the chat now. So when I get to the chat portion, I can answer your question about your chart. If it's a altcoin or something like that, please make sure to put USD or USDT after it so I get the symbol right. All right, so in today's session, I want to talk about the usual, Bitcoin. We're going to talk about the stock market. We're going to talk about gold and the dollar in that situation, and then I'm going to get to your questions, okay? So again, thank you for joining me today. I see some nice comments. I appreciate that. Hey, good to see you, Elizabeth. And we got X, we got Elijah, Schwartz Bond is here. All right, cool. We got the crew. So let's get started. So this is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right. So let's begin with Bitcoin. Now, first things first, we have the reversal structure in place now. So this is actually a buy signal. The buy signal, the price was 42,595, or the high of this previous candle. Now this was a tough one to call, and this candle is still open. Okay, so this is tough. Now, so what do you do with this situation? Do you take this trade as a swing trade? Well, the first thing you have to ask yourself in when you see something like this, because we have the structure, it's a double bottom. Okay, the double bottom, broad, higher, low, relative to the bullish structure. As you all know, I've been talking about this for weeks, right? And I told everyone knows this, I wrote about it in my TradingView article, that one of the scenarios I've been anticipating was either the higher low or the double bottom, okay? Or, I mean, it was possible that this thing could have broken 40K as well, but here we go, we have the double bottom, and it's breaking this minor little resistance area right here, the 45K, right? And then we have like 48K, whatever that is over here. Or slightly higher. What is that? 40. Oh, that's the 45K, right? In this area here. So it hasn't cleared that yet, but it cleared this one, which is, what is that? 44.3. Okay, basically. All right, actually it just touched it and didn't clear it. Let me get my words right here. So here's the thing. If this candle closes like this, all right, that would basically, I would be anticipating a continued bullish momentum. The more important question is, what is the risk? Okay, and if you buy this thing right now, I mean, you're looking at minimum, what's the price right now? 43, is it 43.9? So basically 44, right? At minimum 4,000 points. And the stop should actually be slightly lower than, like, you can't put your stop at 49.50 or whatever. The stop would have to probably go at like 39,950, something like that. So you're looking at just over 4,000 points on this time frame. The next question is it reasonable to make 4,000 points on the next leg higher if this thing can close above this resistance area? So it would have to run to basically 48, right? And that would begin to justify your risk if price can get up into this area. I think it's within reason. What I don't like is, I don't like buying the high of like such a candle, because as you can see previously, not too long ago, right, it was looking very promising only to basically look ugly again, right? So that's the question that you have to answer as far as taking a trade like this. Do you want to risk the 40K, or do you want to risk the 4,000 points now and basically see if this structure stays intact? Or would you rather wait for some sort of momentum continuation pattern, right? And that, at this point, that would come in the form of an inside bar. Maybe this thing breaks out first, then gives you the inside bar, some type of tight pullback, something like a pullback into this area after it pushes higher, pulls back a little bit, something like that. And that usually unfolds in the form of an inside bar. All right, or maybe you get some sort of bullish pin bar after this breakout attempt, and then it kind of pulls back a bit, right? that would be a continuation pattern, and that would have to come off of this area right here. Now, what if this thing, because it looks good right now, what if this thing does not break this minor resistance, right? What if it does not break? Well, then we will have another failed high or possible lower high after a higher low, or basically double bottom. So it's very conflicted. In that situation, I would not want to chase something like that. That's what I would definitely wait for, like the higher low after such a situation. But as the way things look right now, with this double bottom, or basically we can argue that this is a higher low, a higher high is likely. Now, again, I'm not expecting this to go straight to 50K, but the structure may be improving over the following days. And, if you're long. I like Elizabeth says here, I'm making a wine glass that reads hope mode in your honor. That's hilarious. A wine glass. Okay, well, that's good. That's classy. A wine glass. Hope mode. Yeah, I usually, when I'm, as you know, hope is not a strategy. I like to think of hope as refined sugar, because it tastes good, it feels good, but it's bad for you. Wine, I mean, if you drink too much of it, I guess it's bad for you. Anyway, all right, so that's Bitcoin. Let me know if you have any questions about that. By the way, many altcoins, and I'm sure I'm going to have some altcoin questions here. Many altcoins are going to follow a similar pattern, right? So if Bitcoin structure improves over the next few days, which this could be the beginning of it, then I would be looking for the majority of altcoins to show a similar look. And they should all be basically moving the same way. All right, let's take a look at the stock market real quick. All right, NSX, this is the NASDAQ 100. So the NASDAQ 100 has been tricky, right? And this lower high was established after the recent FOMC meeting. And recent days have been bearish for whatever reason, right? There's all types of catalysts in the news and all kinds of other nonsense that people are reacting to now. Some of these problems have been around for a little while. They just didn't come about, but you know how that works. So I was warning people in the chat room yesterday. I said, at these lows, you don't want to react in a bearish way, because that's what everyone else is doing, right? Everyone's reacting to news, whatever. You have to look at the bigger picture. And this bigger picture is not bearish, it's bullish. Higher lows, higher highs, okay? We have a support area, and I've been talking about 14.7. We tried to break that today. What's today's low? 14.695, right? And look where we are now. We're back over 14.8. So it does not want to break that support. It's so far, the support is sticking, right? Now, that doesn't mean you just jump in and buy everything, but the point is, this is not a good place to be short, number one. If you're just thinking of shorting now, not a good place. This is a place to be looking for longs in general, like in stocks, tech stocks. One stock that stood out that I was looking at yesterday was, forget this one now, Netflix. I was talking about this because in the face of an ugly market over the recent few days, Netflix was showing relative strength, okay? So when the market turns, this is the first thing that should go, well, forget it. This thing, you can't touch it now. New highs. But other stocks, right? And I'm talking about correlated stocks like the FANG stocks. Amazon is in a location. Look at the bullish pin bar developing. Look at the potential higher low, right? Higher low, double bottom area relative to the bullish structure back here. This is why you don't want to be reacting on the short side. You should be thinking long. Notice I'm saying thinking, not taking trades, because you have to wait for confirmation, right? Another one, Facebook. Look at this. Similar situation. They should all look similar. I mean, these are what make up the NASDAQ 100. These are all the heavyweights. Apple. Look, Apple's showing a reversal. This is a bullish pin bar, right? That's sort of what? After a bearish pin bar. You see that? So when they get all confusing like that, don't focus on the candle. Look at the level. And that's really what's telling about this. These are support levels. Now, if Apple can hold this, right, and Apple starts to break higher over the following week, the first thing you want to see is a break of the 147 area, right, this lower high. Or perhaps Apple establishes a higher low, which would make sense. okay, if it can do something like that, you will then see the NASDAQ and the stock market reverse and start to show positive days. Here's the S&P. So the S&P has been a little weaker. It's got this bearish outside bar again, but don't get stuck on the candle. Look at the location. So it's been trying to break that support and so far hasn't broken. There are lower highs, just like the NASDAQ. We have lower highs. So theoretically, this thing should make a lower low. Now, I'm not saying that this is a bearish trend or a bear market, but we have to acknowledge the bearish structure, okay? And the bearish structure are the lower highs and the lower lows. Now, we're struggling to make a new low, which could be a sign of strength. And when we look at that, comparing that to the bigger picture, that's a bullish sign because the bigger picture is bullish. It's not bearish yet. Just the recent structure is corrective. Now, one thing I want to say about this situation is this pullback that we're seeing, maybe it goes slightly lower, okay? Maybe it wants to test slightly lower levels. It's possible that we get some kind of test like that, but keep in mind, we're going into the next holiday season here in the U.S., and that they usually call that the Santa rally, right? They call that for a reason. So around this time, this is a seasonal thing, and I've seen this many, many times. There's no guarantee that it will unfold this way, but you have to keep in mind that if the market bottoms somewhere between now and November, right, find some sort of October bottom, that could be the bottom of the Santa rally, right? So you want to be aware of that. If anything, you shouldn't be shorting into the bottom of that or into the lows, if anything, okay? So that's the stock market, that's the outlook. Why I go over these charts like the S&P and the NASDAQ is because it's very important for stock swing trades. If you're looking at specific stocks and this and that, you have to look at these broad indices first because they're going to give you an idea of what the broader market is doing. And then from there, you can gauge the relative strength or weakness of your specific stock. Now, not all stocks are highly correlated to these indices. So you have to know that about your stock, okay? Like biotech stocks, for example, are not so correlated compared to something like a semiconductor stock. All right, let's take a look at gold real quick. Before I even bring up gold, DXY, okay, look at the dollar. This is the dollar index, right, against the basket of currencies. This thing broke out yesterday or the day before, whatever. And what's this thing right now at? It's at 94.22. Do you see this breakout? That's important. That's an important piece of information, right? Let's take a look at the weekly. Look at this on the weekly. So that is a bullish structure on the US dollar. Took out this recent high, right, from a month ago, basically, and it looks like it's going to close on its high. Now, you still have a resistance in this area right here. Look at that. And it's right there. Now, does that resistance, will it have an effect? Will the dollar pull back? The thing is, even if the dollar pulls back a little bit, it now has a bullish structure established. Higher low, higher high. So is this dollar in a bullish trend? It might be. I mean, the structure is there right now. This is the weekly. It carries a lot of weight. So if this structure stays intact over the next few weeks, right, that implies rising interest rates. And rising interest rates aren't good for anything. So let's take a look at the bond market real quick. What are the bonds saying? Because the bonds have been strange, right? They go lower, then they try to reverse, and they go lower, then they try to reverse. So look at this, right? The bonds have made that lower low, relatively speaking, but the bonds have found some kind of, they're back to an important support area. Look at that. Right? Coincides with the dollar at that resistance area. They're basically inverse to each other. So if the bonds continue this way, and let's take a look at the weekly, right? There's nothing bullish about this. Yeah, you can try to argue that this could be the beginning of a bullish pin bar. The week hasn't closed out yet, but still, this thing takes out this support area, dollar is probably going higher, okay? If the bonds take out that support. If dollar is going higher, then you're looking at gold going lower. So let's take a look at gold. All right, now, of course, gold has other factors moving it. But the thing is, here, you don't want to get caught in an opinion. So gold, as you can see, when we zoom out on gold, look at this. Forget that trade. This is an old trade from a while back. I have to remove it from the chart. But for over a year, gold has really made no progress. Okay, if you notice, the high on gold was all the way back in August of the previous year at basically 2,000, right? And since then, it's just been gyrating. That's a wave for consolidation, right? And Bitcoin may be in a similar situation. That's why you can't get all excited when Bitcoin starts to make a move. And you really need to stop consuming euphoric information from these fake gurus. I came across another video where they were criticizing these TikTok people. Man, I know no one here watches that TikTok stuff, or if you do, I know you watch it for entertainment purposes, because anyone that follows these financial advisors, what they call themselves, financial whatever they are, okay, they're kids, they're like teenagers. If you're actually following them, you got problems. The thing is, there are a lot of people following them. So, and I think about that. Let me just go off on a tangent here for a minute. I think about that, and I'm like, man, it's so puzzling. Why would anyone follow these people who clearly have no experience, and they're just making these completely euphoric videos? Well, then it occurs to me, I'm sitting there using logic, okay? Just like you can't apply logic to a random environment like a market, you can't apply logic to that situation where something like TikTok, and you have all these crazy videos and people watching them and people losing money as a result. That's not rational, right? And neither are markets. So TikTok should theoretically make sense, because people like to be lied to. They like the euphoria. Doesn't matter who it's coming from, obviously. You could be a 15-year-old boy in your bedroom making videos from your mobile phone and telling people to buy Bitcoin because you just feel good about it or something, and people will listen to you because it's euphoric, right? It feels good. It's like the sugar. All right, so let's talk about gold. Look at this move on gold. All right, that's interesting. So gold is coming off of this low. It looks similar to Bitcoin, right? Similar situation. And there's this buy signal. Now, gold just the other day gave a sell signal right here. Oh, someone mentioned the other day in my stream that I had not done any Seinfeld impressions. So let me do one now. What is the story with gold? So that's my Seinfeld impression for today. So you had the sell signal followed by a buy signal, all right? Do you chase this thing? It's the same situation as Bitcoin. Are you willing to take the risk is the real question. What is the risk? So the low here is 1722, and this thing right now is at 1756, okay? So 30 points in gold, that's about adequate risk. If you're taking this thing now, your stop has to go below that low. You're going against a structure that's not favorable, but that's a nice large candle, okay? Now, that's assuming, of course, the dollar pulls back. If the dollar doesn't pull back, this is going nowhere, right? So that's something you have to keep in mind. And that's why it's tough taking these trades. If you're going to take it as a swing trade, and you want to take that aggressive trade, there's a few arguments for that. You have a higher low in this area here relative to this low, all that stuff. But gold is not in a trend. So what are you looking for then, right? You're looking to make at least 30 points or something like that, over 30 points if gold can get back into this area over the next couple of weeks. But, it can also turn on you very quickly. In my previous stream, someone had mentioned, or I think it was the one a week before or whatever, someone had bought gold like right here. Someone had mentioned, I just bought gold, what do you think? And I said in that stream, I think it's good, right? I like gold long, and that's true. I liked it there. And the next day, it gave a bearish pin bar. Now, if I was long gold, and I see the bearish pin bar the next day, I'm out. Once it takes out that low, or maybe even earlier, if I have a small gain or small loss, I know I should not hold that. I don't know if that person stayed in that trade or not, but that's the problem when you don't have experience, is when the market gives you a warning and says your trade isn't working, you need to get out, right? If it's a swing trade and you have an opportunity to cut your risk further than what it originally was, you need to take action. You can't sit there and drink wine and hope. Okay, anyway, so those are the main markets I wanted to cover. How am I doing with time? Okay, not too bad. Let me go over your questions now. All right, and again, I appreciate everyone's questions. I see a bunch of questions here. So Elizabeth, it's good to see you with the Hope Mode wine glass. All right, so Cardano, ADA, USDT. Let's take a look. What is going on with Cardano? So here's the thing. Like I said before, a lot of these altcoins are going to follow the leader, Bitcoin. So Cardano is showing a similar look. It's attractive, okay? You have this is a nice little inside bar you have the previous day. It has the current candle hasn't taken out the high yet, but once it takes out that high of basically 202 is the high there, that would be your long signal. Okay, risk though should not be defined by this low. That's not low enough. You can easily get stopped out of this, especially with all the noise in this kind of thing. So you have to go by this low over here. All right, and that's basically $1.90. So you're looking at, you know, a good 20, maybe 20 cents, 25 cents of risk on something like this. And again, you need Bitcoin to follow through. So this is a higher low. Just because it's there doesn't guarantee that the recent corrective structure that we've been looking at here for a while is no longer in play. The confirmation comes when you take out the resistance, right? So by taking a trade now in something like this and risking your 25 cents or 30 cents or whatever based on the structure, what you need to happen for that trade to really work out is you need price to clear this area. If it can clear it, now you have a confirmation of structure change. So the benefit that, or the reward that you get is if you took the risk early, which would be now, you know, that's part of the reward. You're in from a great price. And now when all the breakout traders are piling in, you know, price should work its way higher over some period of time. Now keep in mind, just if it breaks the price, if it breaks it by like a, you know, 50 cents or something like that, or 20 cents, don't expect, it's not reasonable to expect price to go vertical, right? That's not reasonable. What's more reasonable is it makes the break, okay, and then it pulls back again or something. Basically fakes out and pulls back again, followed by another higher low. That's what you want to see. If you're long from here, hey, then you have it from a good price and you can sit back and just watch this thing, monitor it over time. Otherwise, the more conservative thing to do would be to wait for the break of the resistance followed by the higher low and then look for that. That requires a lot more patience. That can take a week or two to play out. But what you want to see over time is this structure change. And it's in a good location to do that, okay? But at the same time, there's no guarantee. So this thing may be consolidating. It may go to a point and then turn around and possibly break the support. So you need to be prepared for the adverse scenario as well. If it breaks that support, you need to take that loss. If it's a swing trade, you need to take that loss while it's small. Or what if you agreed with yourself on a specific risk and it's there, you need to take the loss, because otherwise you open yourself up to a much bigger loss. All right, and I'm sure many of you have had some experience with that. I know I have. So that's why it's very important to respect that stop and take the loss. It sucks sometimes because it's like, you know, I understand, but it's better to take a smaller loss than one where it wipes out 50% of your account, because it can happen. All right, so that's Cardano. All right, so Eligius, I don't know if I pronounced your name right, from Lithuania, welcome. Okay, so copper futures, let's take a look. Copper futures, I don't get that one very often. Well, here's the thing. So copper is going to be against the dollar, okay? It's a metal. And it's interesting because it's red, right, while gold is green. So, and they're both metals, right? They're both in the same family there. So the thing is, copper, though, is going to be more correlated to anything infrastructure related, because copper is used in construction, right? So if there's any political, I know there's a bunch of political stuff going on with that. I don't pay very little attention to it because it's absurd, most of it. But the thing is, all that political talk, right? Talk that you could tell I'm from New Jersey. Oh, by the way, if you want to put what country you're from or what city you're from, it's always nice to hear. I'm streaming from northern New Jersey. In case you couldn't tell from the accent, I'm about 15 minutes outside of New York City. All right, so this is all going to be relevant to infrastructure talk. And if there's anything negative about it, right, like the bill is not going to go through, blah, 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 right, you're going to see this. So I don't know what the details are. You can't trade on that. All you can do is look at the levels and evaluate your risk. I drew these two lines here because what you have here is basically a range-bound market. The general trend on this thing is bullish, okay? And that makes sense. If you look at a lot of the construction stocks, like Caterpillar and all those other ones, they have a similar chart. So you have to watch that situation, right? But the chart is generally bullish. So what you're looking for here is another hold of this range low. Yeah, we can argue that there's a lower high in place, right? And this coincides with that dollar breakout. But the thing is, it hasn't made the new low yet. So what do? Well, in this situation, you can look to play the range. And if you get an inside bar here or a bullish pin bar over the next couple of days, that would be an interesting long signal. It's at least at the right location for a long signal. This is not a bearish trend, right? Not yet. So if you can get a long, the goal, the objective would be to get out of it somewhere in the middle. That would be one place to start getting out. So you want to make sure your reward risk makes sense in light of that. And then you maybe want to ride some, if you have 2 contracts on or whatever, 2 micro lots, whatever you got, you try to ride some to see if you can get back to the range high. But until there's some decisiveness or clarity as far as that political situation goes, this thing will probably stay range bound. Now keep in mind, if there's some overnight news that they make some kind of decision that no one expected, this thing can gap through or clear that support and the party's over. Right? That's why, again, you have to make sure, even though the trend, we can argue the broader trend is bullish and you're fooling around range lows, which is an ideal place for longs, if that support breaks, you need to mitigate that risk. Okay, you need to be prepared to get out, take the loss, whatever. Don't hold on to it because this thing can get hammered as a result of such a catalyst. Okay, if there's some kind of news situation, right? All right, so thanks for asking about copper futures. So like one thing you don't want to do is don't beat yourself up with all the economic stuff, right? Because we could sit here and look at this and look at that and argue about this and argue about that. But when it's after it's all said and done, markets are irrational. So it's about how the herd prices in perception of the future. That's really what determines the value of this thing now. So instead of sitting there trying to figure out what that is, follow the price, because the price it prices in all known information in the world, right, at every moment. So whoever knows what, the smart money, whatever, if they start piling in on the long side and they hold this thing up and you get the signal for that, I mean, that's what you have to basically believe, okay, price, because they know things that we will not know. Or by the time it reaches the news that retail traders get to hear, it's useless, it's old. All right, so anyway, enough of that. Thanks for asking. What else we got? So Schwartz, hey, it's good to see you. Okay, from Romania, but he's Schwartz Bond. You never know where in the world he'll be. Okay, Adnan from Switzerland, welcome. Andre, okay, good. AVA, all right, let's take a look. AVA, USDT, let's see what's going on here. So, like I said, many altcoins, and I said this before, they're going to look similar to Bitcoin. What do you have here? You have a possible double bottom. The broader structure, similar to Bitcoin, has been bullish. So these are attractive locations for longs, and we're probably going to see this across the board. If Bitcoin is doing what it's doing, we're probably going to see that here. So look what's going on here. What do you have? Looks similar to that ADA chart, right? So you have, it broke the previous day's high of 76 cents, just over 76 cents, and that's a buy signal. Now, what is your risk if you take such a signal? And what is the potential it can reach an area that justifies your risk? So $2.60 is this low over here, okay, the current low of the previous candle. So you're looking at a good 15, maybe 20 cents of risk, right? Which means you need to make 20 cents or more to justify that. Can you do that? Let's see, $3 is over here. That would be this area. If you're getting out around there, you're just probably just a little over 1-to-1, which is good. So that's the thing that you have to decide. If it's a swing trade, you have to determine if you're willing to take that risk, okay, if you're willing to give it that chance. If it turns red and breaks the support, you have to take that loss, or, I mean, you don't have to do anything. You don't have to listen to me. I'm just saying it's a good idea to take the loss. Otherwise, that loss can get a lot bigger. See, that's the problem with hope, by the way. You know, when you go and buy a product like, you know, I don't know, you buy makeup or you buy whatever, some clothing, you know, you buy your item, you buy your product, and that's it. Your money is no longer exposed. That product is not going to cost you more money in the future. The problem with hope in the market is that can cost you more money in the future, a lot more money, because the market can just keep going and going against you for as long as it wants. And if you're using margin or leverage, you can get knocked out at the worst possible time, take the largest possible loss, and then watch the market turn in your favor. Okay, that's the problem with hope. Anyway, so here's the thing with this. If you're willing to take that risk, you need to see this thing start pushing this area here, and then if it can, and it can clear it, which means Bitcoin will have to be doing something similar, then your structure is changing. So this is a good location, you know, for a structural change, but you're going to have to wait through a lot of, you're going to have to be very patient with it if you take that, all right? And you're going to have to watch Bitcoin as your guide, because it may give a sell signal first, okay, and help you adjust if you're in something like this. So thanks for asking about AVA. All right, hey, Winter Fresh from Romania. All right, I'm big in Romania. Yeah, my Romanians. Schwartz, if you can please take a look at Rune. All right, let's take a look. Rune, let's see, what is that? US, is that, do I have the right symbol there? Let me see. Let me put the right symbol in here. USDT, right? Okay. All right, so same idea. Look at this. Double bottom, right? The broader structure, this whole structure here, right? This, you're looking at a potential higher low, right? This whole thing, this corrective structure is a higher low. So that's a bullish sign. Okay, that's a sign of strength if it can hold, just like Bitcoin. So this is a place to go long. You have to decide, again, just like with the other one, just like with ADA and all that, you have to decide if you want to take the risk. So let's talk about that. The risk is 646, basically, yeah, around that area right there, 645 area. And the signal, while the candle is green, the signal's actually not there yet, because you need to take out this high, the previous high of 710, okay? You need to clear that. So you're looking at about a good 50 cents of risk once it gives you the buy signal. You need to justify that with 50 cent of at least a 50 cent profit. Can you do that? Let's see, 9.25. This is the resistance up in here, 9.25. You have some resistance in this area here. What is that? 750, just around 760. So I think it's within reason. Okay, just like Bitcoin. I mean, it's all within reason. You just have to decide if you want, how you want to manage that risk. And, part of that is determining your position size, right? And part of that is based on how much money you're working with, okay? Just because, let's just say you have $20,000 all together, but part of that $20,000 is used for, maybe you're using it for some stock trades, maybe you're using it for some other type of trades. That money should not be part of your risk calculation when you're looking at a swing trade for something like this, right? You have to decide, what the max amount is that you're using for these type of instruments. So let's say maybe you have $20,000, but $10,000 is going to be separated for just swing trading altcoins, right? That's where you measure your risk from. So now you're looking at percentages of 10,000, not 20. right? You understand? So in a situation like this with this type of trades, it's really not a good idea to risk more than 2%, 3% max. I mean, when we send out a swing trade, we never send out a 3%. The max we usually send out is 2% if we send something out. Most of the time, we only risk 1%. So you have to keep that in mind. If you're risking like 5% or something like that, you're going to run into big problems, especially when you run into a larger than expected loss, right? So you have to make sure that risk is really under control. If you're position trading or basically investing, it's a completely different game. All right, so everything I just said is not really going to apply. You have to work more with sizing. You're not going to have specific stops. All right, so let's move on from there. Thank you for asking about Rune. Hey, Tom, from France, I would mind looking at Atom. Okay, let's take a look. ATOMUSD. So this one is what I mean. Generally, look at this thing, right? Generally, that's a nice strong chart. Higher lows, higher highs in general. Okay, bullish trend, no question. Now, recent price action is a little bit more questionable. We have a lower high over here, so we have this corrective type of move, but it's a consolidation. You know why? It hasn't taken out the low, right? It hasn't taken out this low. It established a low right there and has yet to take it out. So I would suspect that this thing is most likely in a consolidation. Now, it's obviously at the moment, it looks like it's copying Bitcoin. It's following. So same situation as the other coins. You have to decide if you want to take this risk, all right, which is 32.56 is the low. It's not the best place to take risk. And I'm going to tell you why, right? This would be one place to consider the stop once this thing takes out this high over here. You have to take out that high to generate the buy signal. Those are confirmations, okay? I mean, you don't have to wait for it, but it's usually a good idea. Even though it's a worse price, at least it shows that there's enough buying pressure to take out a previous high, right? Which is important. Now, the problem with this is it's tight. This is likely to get stopped out. So the risk, either you define the risk from here, okay, which is, what price is that? 26, basically 26.38 or 26.40. That's really where your risk should be defined. All right, and this thing right now is at 34.86. By the time you'd be buying this thing on the buy signal, you're looking at 36.63. So you're looking at a good 10 points of risk on something like that, and that's assuming that this thing, can get its act together and make another leg higher from here. It's tough, okay, especially since, what is this? Is this 10 points higher? 42. No, that's not 10 points higher. So you have to assume that this thing is going to have problems around here somewhere because others are going to sell there, right? Because it's a previous high twice. So the reward risk at this point doesn't really make sense. The better thing to do on Atom is see if it can give you a retest of this 26 area low followed by some type of reversal. Now, that doesn't mean you buy it at 26. It means you wait for a reversal there, which means after it touches 26, it may bounce up to like 28, right? And that may be where the buy signal shows up, and that's where you'd actually be buying it. And then your stop would go somewhere below that 26 area. All right, $2 of risk or $3 of risk is a lot better than $10, number one. Number two, justifying that risk, $3 or whatever, is a lot easier, especially from that level, right? And that's really the key thing to something like that when you're judging these trades. Now, everything that I just said may be completely irrelevant because this higher low may just lead to a higher high. But this game is not about that, right? Because markets are so random that it's really about, is the risk worth taking or not? And there will be times when it's not worth taking, but then the market moves the way you thought it might go anyway, right? But if the risk wasn't worth taking, I don't care where the market moves. The risk wasn't worth taking because over time, it's the control of your risk that leads you to coming out ahead. When we disregard risk, that's why no one makes money, okay? And all these fake gurus that claim to make money, most of them don't make money either, right? There's so many I love when people like call out these fake gurus and then they have all this like evidence on them on how all these tricks that they use, and oh, it's horrible. Anyway, okay, so let's go on to the next one. So that's Adam. I talk too much. I need to stick more to the questions here. Hey, Guy from Germany, welcome. Mike, okay, just catching up on the chat here. Man, I'm slow today. Okay, can you check out, oh, good and friendly voice. Wow, thanks. I'm not very friendly, but okay. Oh, maybe I am. Can you check out Polymath? All right, let's take a look. Poly, is that a, I guess that's a coin? Let me see. Poly USD, right? Okay. Oh, interesting. Now, this is a candle that's getting out of control there, right? So first things first, don't want to chase that. Let's talk about the structure. So, I mean, this is bullish. Obviously, there's a lot of activity here, possibly hype, because when I see something like this, and then you get that long tail off of that, obviously someone was hyping about it somewhere. Anyway, let's talk about this. So you have a double bottom, high or low. That is a nice, ideal setup, okay? The structure was there. Let's take a look at the candles. The buy signal would have been 56, just over 56 cents. So this thing right now is at 64 cents. Buying this now would be chasing it. Or, you know, if you buy it, you're taking a lot more risk. So what do you do in this situation? Well, you can decide, and again, it looks like Bitcoin. Looks very similar to Bitcoin, probably reacting to it. You can buy it now, put your stop at this low. What is that? 51 cents. And if it goes there, you get taken out. But the thing is, if it goes there, and you're long from 64 cents, right? You're looking at what, 14, let's say 15 cents of risk. You need to make at least 15 cents in the trade to justify it, right? But in general, you know, I like the structure and I like this change. I like the fact that it took out this resistance. And yeah, now it's pulling back into it. But the fact that it took it out is a good sign. So a more conservative thing to do would be to see if you can get a little mini high or low or something like that in this area here over the next day or so. That can unfold in the form of a pin bar or an inside bar. Okay, if you notice, that's the only candles I ever talk about because I like only those candles, right? Only those candle patterns. So if you get something like that in here, that would at least give you a better price to get in. With a more attractive reward risk. So you have to decide what is more appropriate for you, okay? I tend to be more conservative, so I like to wait for more of those setups that offer the more attractive reward risk. Now, in that process, I miss a lot of trades as a result of that. So some people don't like that, and I understand, but I also miss a lot of bad trades. And in this recent environment that we've had, there have been a lot of potential bad trades that I missed. Okay, so that was Polly. Thanks for asking. Andre, I'm in from 40K on Bitcoin. Should I take profit at 44K? Great price, Andre. Let's take a look at that again. Well, here's the thing. That was 40K. That was a nice, I guess you stepped in front of that, right? Because there was no clear signal, not on this time frame anyway. The question is, how much risk have you taken on that trade? Where was your stop? You don't have to tell us, but if your stop is less than 4,000 points, then, and you're up 4,000 points in this thing, then it's wise to take something off the table. Now, you don't have to take it all off the table because you have a great price and you have a structure that's changing and a candle that's going to close strong, basically. That's the way it looks right now. So you want to try to give some of it a chance, but what really helps you determine where you should be taking profits is how much you had at risk, right? You want to do better than 1-to-1 at least. So if you're at like 1.5-to-1 or you're at 2-to-1 at this thing's at 44K or whatever, then yeah, by all means, take something off the table. How much should you take off? Well, typically when we send out swing trades, we take off 30% or 1/3 of the trade at each price target that we set, right? So consider something like that. Or if you want to take off less because you're more optimistic about this, then sure, right? Just take something off the table. It's a good habit to get into. In this situation, the way this candle looks, after taking something off the table, I would definitely give it a chance to see if this thing can clear that 45K area, especially with a nice strong look like this, right? That's a nice strong looking candle close, if it can close like that. Now, in the next couple of hours, if this candle gives it all back and it turns into like a pin bar, that's bad, okay? But that's a chance that you take. And that's when you're giving a market a chance to pay you more, you're also taking a chance that you give back, the profit that you have, but it's profit. So it's okay to give it back, okay? It's house money, as they call it. So you have to decide how you want to manage that. But great trade, nice trade. Hey, DJ, good to see you. CGC. Yeah, DJ, that thing has been, I think the G in CGC, I think the G stands for garbage. Okay, let's take a look over here. So this thing, Can It Be Garbage Company, has been lower highs and lower lows and lower highs and lower lows, and it just refuses. The other day, someone had asked me about the potential high or low over here, and I said, okay, yeah, you have it. You have that situation developing there. And what's interesting too is, if you look back, it's at a support level, right? It's at an attractive level, right? That is a level of interest right there. But the problem is the structure is just not improving. So I would wait on something like CGC. I would wait until you get a much better confirmation of structure. I mean, look at recent attempts, right? Look at this. Look over here, right? This was an attempt at improving the structure, only to get hammered and to give it all back, right? And break supports and go lower and lower. So the first thing that you need to see, DJ, is you need to see resistances start to get compromised. And these are your resistances right here, right? First one is at basically 15, and the second one is around here. What is this price? I guess that's going to be around 18, right? You want to round that to the whole numbers. And you need to see those get taken out. You need to see some higher lows in there, not lower high and lower low and lower high and lower low like we keep seeing. Right now, this thing is poised to make a lower low, especially if this lower high stays intact. I can see why you might ask about it. There's a bullish pin bar in there today, but that pin bar carries no weight in this situation, right? It's always about the context. This structure carries much more weight. I would expect a lower low over the next few days, right? Unless it can prove otherwise. So I would stay away from CGC. Thank you for asking about it. Hey, X, is there any relationship between USD? It went up 2 days ago and now, okay. So here's the thing. There is some sort of correlation, right? But that relationship is constantly changing. So that's why you can't sit there and say, well, dollar has done this, and Bitcoin was bearish the other day, and now Bitcoin is bullish, and dollar's pulling back. There must be a relationship. There generally is. Anything against the dollar, right? I mean, Bitcoin is a currency, so theoretically, as the dollar goes higher, theoretically, Bitcoin should go lower, but Bitcoin also has other variables that drive it. I mean, any little news event can come out on Bitcoin. Elon Musk can come out and say, oh, I'm buying Bitcoin. Why am I doing Elon Musk as Seinfeld? Anyway, if something like that comes out, no matter what the dollar is doing, Bitcoin will be back at 48K in 2 seconds, right? So that's why don't get mixed up with that intermarket relationship. You're better off, if you're going to look at like intermarket correlations, look at ones that are more stable, like the S&P and your highly correlated S&P stock, or altcoin versus Bitcoin. Those are typically more predictable, more stable relationships. Something like the dollar and Bitcoin, it's all over the place, right? So I would not put any weight on that. Okay, that's why just stick to the levels, stick to the structures. It'll give you more actionable information. Is the right word. All right. So thanks for asking. Good question. Hey David, happy to be on time for the rant. Oh, yeah, fake gurus and yeah, right. That's my rant. I'm sure I got some more rants too. Just waiting. They just come to me. But anyway, yeah. So thanks, David, for stopping by from Spain. I know he's from Spain. DJ, if you guys please like the video. Oh, thanks, DJ. I appreciate that. Yeah, I've been researching on how a lot of these guys are doing these things with these amazing views and stuff. And I basically I understand what's going on. Right now, it's just really like a resource problem. It's hard for me to do the right things that have to be done to position my videos the way these others are doing it. But I see what's going on now. And I see how, it's not just they're putting just a fancy title with just their stupid thumbnail. It's a lot more than that. And, I have to work out my logistics so that I can do something similar. But anyway, it's just they're able to find what people are. They're basically able to find the what the herd is in need of right now. And they put that video, and because they have other similar videos, all that stuff, the YouTube algorithm works in their favor, and everyone clicks on, the ADA video, the Cardano video about Cardano's going to 100x over the next day. And then you see the guy with his eyes wide open. He's going to retire on Cardano, blah, blah, blah. And everyone clicks 150,000 views in 2 days. Wow, great. Meanwhile, that's like these people on TikTok. They're making all kinds of money. I guess they're monetizing their traffic, whatever they're doing. And then you have a guy like me. I've been in this game over 20 years, and I can't even get 100 live viewers. I can't even get 100. Okay? And meanwhile, you have a 15-year-old kid that has 500,000 views or whatever on TikTok. All right. Enough of that. Let's go into, all right. Voice. I feel attacked with the wine comment. Oh, okay. I guess you're joking. I just turned on this channel and took a sip and heard a. Oh, well, no. Elizabeth is joking because, I always talk about hope mode, and wine is a perfect alternative, right? We turn to things that make us feel good when we need hope, like sugar or wine or other comfort foods or whatever, right? And my point is, and I've talked about it in a lot of the streams, I just talked about hope is bad for you, okay? As I said before, it leads to larger losses. It's not a strategy. So anyway, it was just an inside joke. So anyway, David, okay, next moves on ETA, okay, Ethereum. And I think someone asked about Ethereum earlier, and Elizabeth asked about it. And I completely missed that part because I was distracted by her wine comment. So let's take a look at Ethereum. So what you want Ethereum Euro. Ethereum Euro is going to be the same as Ethereum USD. I mean, just the numbers may be slightly different, but it's going to be the same type of chart. Here's Ethereum Euro. And let me pull up Ethereum USD, okay? It should be the same. I mean, it's basically the same. Here's Ethereum USD. So, not unlike Bitcoin, right? Like same situation. The candles are slightly different. You had an inside bar yesterday, took out the inside bar high today. That price, $29.50, was the buy price. So, I'm not surprised because, Bitcoin is doing the same thing. So there is a double bottom here, okay, or higher low, whatever you want to say, and Bitcoin is doing the same thing. So those are all bullish signs. The same argument as Bitcoin. The question is, can Ethereum, no matter what chart you're looking at, Ethereum USD or Ethereum against the euro, can price take out this resistance? In theory, it should, because you have a higher low. And where there's a higher low, often it's followed by a higher high, especially when the previous structure was a series of lower highs and the lower low should have been made, which means there are traders caught in this thing. Most likely you have a lot of shorts that are caught because they all look at their 30-minute chart, or they follow their favorite TikTok guy who watches a 5-minute chart, and they all get short. In a really bad area to get short, okay? And I've been warning people, this is a really bad area to short this thing because you're shorting right into a potential support. Anyway, those shorts have to cover. And when they cover, you see vertical, right? Vertical green, because they're the ones buying, right? On top of all the new buyers piling in. So, I mean, that argument goes across the board. Everything that we just looked at, all the altcoins, Bitcoin, it's all the same situation. So it needs to clear this resistance. If it can, you have your confirmation that the structure is changing. All right, and then I would be anticipating higher prices after such a scenario over the coming week or two. Okay, I'd be expecting to see, if we can make that higher high, I'd be expecting to see another higher low following it. And that new higher low, which can develop around here somewhere, right? Let's assume that price breaks out, okay? Let's assume price breaks out to something like this, goes up into here in this area, and then it fools around a bit, blah, 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 get a bearish pin bar, blah, 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 and then it pulls back into this area right here. That would be a higher low after a breakout. So if we see something like that, that would be another long signal, or a potential long signal, if it can confirm. And that would also be a change of structure, right? A higher low after the resistance break. So that's what you should be watching for, going into the following week. But I like these things. I mean, right now, I like the change in structure. It's definitely a bullish argument, okay? And a time to consider aggressive trades. All right, so that's, I hope I answered your question, David. Okay, hey, trending Bitcoin prediction. Bitcoin prediction. Okay, well, so I talked about Bitcoin earlier. If you just go back to the beginning of the stream, I always talk about Bitcoin first. I don't make predictions in the standard sense because I don't know where these things are going. No one knows where these things are going. So what I do is I look at price action, price structure, and I look at the context. I look at the candles, right? I looked at a bunch of these variables, and from that information, I'm looking for potential risk. What is the risk? What is the potential reward? And what is the structure saying as far as recent, where these things go recently within reason, right? So, I mean, you want a number, you want me to give you a number on Bitcoin. Well, the next resistance is around 48. Okay, that's the next resistance, this area right here, if it clears 45. So that's where I'd be anticipating this thing to go. And all the altcoins following it should be making a similar move if this candle closes strong and takes out the 45K, right? If it does not close strong, or if we get the bearish pin bar right after the close, okay, meaning it closes like that tomorrow, we get the bearish pin bar, that means it's most likely just noise and possibly faking out. I'd be anticipating another test of support in that scenario. Keep in mind, it's good to define a number of scenarios. So you have your bullish scenario, you have your bearish scenario, okay? And then the market is going to have to align with one of those. And if it doesn't align with either one, then you're stuck in a range, basically, right? Because it's not going either way. So if the market shows signs of the bullish scenario confirming, well, there you go. And the next resistance is 48K. But like I said, if it fails here, it could break 40K, and in that scenario, 37K is the next support. You have to let the market answer the questions. There's no way to know in advance. And anyone that tells you otherwise is lying to you. Okay, so hey, Scott, good to see you. Okay, Scott, I'd love to hear some suggestions for, stocks, if you have any of that come to mind. Well, dividend-paying stocks. Well, the ones that come to mind are like you have like the energy stocks pay decent, like ExxonMobil. I mean, look at this thing. This thing recently popped up because of oil. Not looking so good today with that red candle, but ExxonMobil is a good pair. I think Marathon Petroleum is another one. All right. I mean, these have recently popped up because of the energy, right? Look at USD WTI, which is oil. I mean, look at oil back on its highs. Unbelievable. So in that situation, yeah, those would be the two that I could think of that pay decently. I'm sure there are many others, but those are the two that come to mind. I can't think of any others at the moment, but thank you for asking. So with something like that, like a Marathon Petroleum, so they pay a decent dividend. You have to Google how much they pay exactly, because I don't remember how much they pay. But the point is this: do you want to buy this thing up here? Even though they pay? No. Okay, look at this. Look where you are. Okay, just like oil, right? Oil is also at that same resistance. So you want to at least wait, if anything, for supports. Also, I believe gold stocks. I know Wheaton Precious Metals pays a dividend. Ooh, look at this. Now that is a much better location. Look at that. But gold is getting beat up. Okay, and we saw the dollar is rising rate environment. This may get beat up even more. What's the price here? 37.58. So, in situations like that, you want to start accumulating these stocks. Just be careful with that gold situation, because something like this, if gold gets hammered for whatever reason and gold goes to 1650, you're going to be taking some pain in these stocks. Yes, they pay dividends though, so they're paying you to hold on to them. So you want to make sure you play that game carefully, okay? But those are a couple that I could think of. Thanks for asking. Let me see what else we have here. Tonight is the monthly close for Bitcoin. Does this give us any significant information? Oh, I'm sorry. Hold on. I skipped a few questions here. Sorry. Hold on. Let me go back. I am slightly behind in the stream. I watch TikTok videos. It's like of what not to do. Scott, you just figured out the secret of TikTok. Do the opposite. Okay? It's a contrarian tool. Hey, Ying. Hold on. I'm just going back. I missed a few things here. Ying from Barcelona. How about Altria Group? Okay, hold on. Let me go back. I'm sorry. I just skipped a few things. I can't even see anymore. So Altria, what is the symbol for that? Let me see. I'll tell you in 1 second. MO. All right. So, oh, man. Okay. So here's the thing. Obviously, that's news. Perhaps they had a bad report of some kind or whatever. Definitely, what is this thing? This thing's minus 6% today, 6.5%. That's a lot for this thing. But look where look where price went to, right to the support, right? So here's the thing with this. General trend is bullish, and you're now back at the range support. It's been here a few times over the previous year. Now the thing is, this time though, you have this bearish momentum right behind you. I mean, that's a pretty steep candle for one day. This is a lot to deal with, right? So in this situation, if you're not long this thing, you want to wait until this thing stabilizes, because with this type of bearish momentum, it may go right through this support, okay? And the next support that you have on this is like over here in this area. So you might want to wait. 43 is the next support on this thing, and this thing's at 45. That's $2 away, but $2 is obviously a lot for this thing. So you want to wait for something like that, or you want to wait for price stability. Like when I say wait, you don't want to step in front of something just because it's at a price level, right? Just because it's at this pretty significant support, like I said, it can clear it with no problem. Levels alone are random, so you can't step in front of them with any type of confidence. You need, or I think it's wise to wait for some sort of confirmation, right? In this case, you need stability. What would that look like? Well, price needs to stabilize, gyrate, give you a double bottom, some sort of failed low situation. Basically, it needs to do something like this back here, right? You want to see something like that repeat. You want to see something like this repeat. Okay, that can take a good week or two with the way this thing moves. So that's what I'd say about this, but certainly a much better location than buying the high. Now, if you're investing in this thing, well, this is a support level where you take a small bite, but again, you may get some better prices over the next week. So you don't want to accumulate too fast, okay? That's why even in that case, it's better to wait for some sort of stability. All right, now if you're in this thing from a higher price, I don't know what to tell you. I hope you're not. Okay, anyway, so thanks for asking about Altria. Okay, Scott, okay, here's talking about what not to do. I see teenage kids renting Lambos, high-rise offices because they are traders. Yeah, it's hilarious, Scott, some of the stuff. And I don't watch TikTok. I don't have TikTok. I'm watching stuff that other people are criticizing, on their channel, and they're just picking like these highlights, and it's hilarious. I watched one guy, a question to a trader, because they talk like traders are now like this glamorous I'm a trader, right? And the trader lifestyle, right? And they asked one guy, why do the traders have so many monitors, right? Why do stock day traders have so many monitors? You know what the guy says? Because I have to watch the 2-minute chart, the 5-minute chart, the 10-minute chart, the 15-minute chart, the 30-minute chart, the 60-minute chart, and it was so absurd. It was so ridiculous that I'm like, well, people believe this stuff? But I guess if you're 15, or something like that. I guess you believe it. I guess there's no logic to this. Anyway, yeah. Okay, so now Scott says tonight is the monthly close for Bitcoin. No, so by the way, when you say do the opposite, yes. TikTok, contrarian tool. Do the opposite. Anything public, but especially TikTok, because they have to be the most mindless people I've ever seen talking about, you know, stock or trading stuff or financial stuff. And yeah, okay. Anyway, so let me see. Michelle, hold on. Will Cody reach? Okay, I'm just jumping around here. Jaceel. Will Cody reach 77 cents tomorrow? COTI. I'm guessing that's a coin. Oh, look at this. Talk about herd mentality TikTok people, right? Okay, so I'm sure you can find this one on TikTok. Here's the thing. Look where it is right now, from where it's coming from. You're fooling around near a peak, and it's tested this area before. You see this pin bar over here. Will it reach 77 cents tomorrow? This thing right now is at 68 cents. You have a bearish pin bar that's unfolding right now. I'm sorry, not a bearish pin bar. A bearish inside bar that is unfolding right now. If the low of this candle, if this candle closes like this and the low is taken out, then most likely it's not going to reach 70 cents or 77 cents tomorrow. Most likely it's going to work its way lower. All right, that's what that's telling you, especially off of a potential double top area, which is what you have right here. I hope you didn't get this advice from TikTok. Anyway, yeah, I wouldn't go near this thing at these prices. You want to wait for a support. If anything, if you're going to play this game, you need to look for a support, and that would be around here, okay, which is around 47 cents. That's where it's more likely to go if these candle lows are taken out over the next few days. Again, if you're new, understand that these type of coins, they're like lottery tickets, all right? Not only that, but you have these TikTok people, these mindless phone bots is what I'm going to call them. They're spreading all this euphoria and all this nonsense about these things. They're getting people to buy in at the top when there's no one else buying, and someone is selling to them. I wonder who. Okay, and you get caught at the top. So don't play that game. You are part of the herd mentality if you're buying the high. You want to wait for a low or a support in this case, and you want to wait for confirmation at that level. And that will at least help you time the trade better. But even then, this type of thing, it's total gamble, this type of thing, right? Especially if there's a lot of hype behind it. Anyway, good question. So Michelle, now I get to your question. Michelle, good to see you. How to correctly balance an investment portfolio, long-term inventory, a long time? Okay, no problem, Michelle. Okay, good question. So long-term portfolio, so more like position trading or investing, how do you balance it? Well, there's a few variables there. I mean, that's a very elaborate question, or that would require a very elaborate answer. But basically, to give you like a quick answer, you have your you have to have some sort of main amount of money, right? Like your investment amount. Let's just say it's $10,000. That's all you have, and that's what you're investing. Okay. Now you're gonna have to break that up into different allocations depending on what your goals are. So, for example, you have 10,000 and you want to be more aggressive generally. Okay, fine. So you're going to take a portion of that 10,000 and you're going to cut that up for more aggressive strategies. One aggressive strategy would be like day trading these altcoins. That would be extremely aggressive. So you're not going to take 5,000 of your 10,000 and say, okay, I'm going to use that for day trading altcoins, because that's 50% of your long-term inventory, right? So you're going to allocate like $1,000 and that's it. Now, for the rest of your money, the other 9,000, you're going to split that up into other, maybe you have a swing trade, or, as far as complete long-term, just long-term investing, let's just say the other 8,000, let's say you've split 2,000 up for other things, and now you have $8,000. That is for long-term investing only. At that point, you're going to have to pick your instruments based on how aggressive or conservative you want to be. So again, if you're aggressive, you're going to be thinking more altcoins, okay? Which again, I'm not a big fan of for inventory, but some of these coins, they do their thing. Or you want to be a little bit more conservative in the altcoin space or whatever. You know, you pick some of the leaders like Ethereum or Litecoin or something like that. And now you're going to build inventory in just those, okay? But you can't just pick any random coin and be like, oh yeah, this one is hot right now, I'm going to get into this one. That would not be appropriate for your longer term strategy. And then you would pick some more conservative instruments. You should have like a balance. So you have some aggressive ones, and then you have some more conservative ones, perhaps some stocks, right? Some stocks that are you know, leaders in their industry, something like Apple, something like Walmart, you know, one of those type of stocks that you can also build inventory in as the market, you know, gives those opportunities, right? And one thing you want to do is, instead of timing by the chart when you're talking about inventory, and you've split up your portfolio by, let's say you rank it by aggressiveness or conservatism, right? However you want to call, whatever you want to call that, how aggressive you are. The less aggressive, you're going to have your more conservative stocks like Walmart. The more aggressive, you're going to be, you know, in like some kind of altcoin like Solana or whatever. And instead of timing it by chart, you time it by time and size. Meaning, you're going to, let's say with Walmart, you're going to buy on the 15th of every month, you're going to buy 1 share, or you're going to buy 10 shares, or whatever that is, until your allocation is used up. So out of your $8,000, perhaps, you know, and you have 4 instruments, okay? Each instrument can be allocated $2,000, okay? So now Walmart happens to be one of those instruments. On the 15th of every month, you're going to buy a couple of shares of Walmart until you use up your $2,000. All right? And once you've reached your $2,000 investment on Walmart, that's it. No more Walmart. Okay, and that goes the same for the other ones. Anyway, so I hope that answers your question. And I can go on and on and on about that, but that's how I would answer something like that. And again, it's not about charts. It's more about your size and your overall allocation, and all of that is going to be shaped by your goals, like how aggressive or conservative you want to be or need to be. Okay, so thanks for asking. All right, so now Scott. Tonight is the monthly close for Bitcoin. Does this give us any significant information? Interesting question, Scott. Not particularly, but let's take a look at a 1 month chart and let's see what's going on. What is going on in the 1 month Bitcoin? So, I mean, look, that's the 1 month, that's the way the monthly candle is going to close, right? That's interesting because that's a bearish candle, right? And not exactly, like if this was like a 1 hour chart, or if this was a daily chart, or, you know, a smaller time frame, I would certainly be looking at that as something bearish. It's a lower high. So something to keep in mind. Now, just because it looks like that, that doesn't guarantee we're going to see the next month be red. But if we take out the low of this candle, that would be a significant piece of information, Scott. So I'm glad you bring that up. Because again, it's not the candle itself, it's really the high and the low of the candle. And the next candle may be green, okay? And may give us a green inside bar, that's possible too. But that will take an entire month to develop. So what you need to keep an eye on here really is the low, okay? That's what I'd be watching for. And that low happens to be what? What's the monthly low? The 40K? That 40K area there? So yeah, that's what I would look at that. Let me see, what's the low there? Yeah, it's the 40K low. Okay. So if that 40K is taken out, that's definitely going to be a significant piece of information. Thanks for asking. Good question. All right, what else we got here? Okay, so Andre, my stop was 39K, and yes, I went aggressive. By the way, oh, I appreciate that, Andre. Thank you for buying my ebook. Yeah, real quick, you mentioned the ebook, and you asked that question like an hour ago, or you mentioned that an hour ago. I wrote my ebook a while back, and I'm using the same techniques. Everything that you see that I'm doing here comes from the techniques that I use in my ebook, okay? The ebook it's short, it's a short read, but what I've done in there is I've put together the techniques that I have found over the amount of time that I've been in this game, and it's not been 2 years. I love these 2-year veterans. I've been in this game 2 years. I've been in this game more than 20 years, okay? So I basically put together the techniques that I have found that offer the most value on a chart, okay? Charts help us to a point, but we're not going to get perfect results because we're perfect chart readers, right? It has nothing to do, making or losing money has very little to do with a chart and has everything to do with your risk tolerance and your confidence, okay? And what helps to improve confidence or your own psychology is having a set of rules. So the ebook basically focuses on the techniques like, you know, using trend lines, using Fibonacci, using Elliott wave, using things like that to first extract particular pieces of information to give us a better context. One thing I want to point out, and I'm glad you mentioned, I'm not selling the ebook here, okay? I know it may sound like I am. Buy my ebook for $9.99. What I'm pointing out is there are many, many strategies on the internet you can find on Google. Just Google it, right? On YouTube, you will find many free, 99% win rate or 80% win rate strategy, Forex, blah, 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 blah. Okay, I've watched these videos. And they'll have like a moving average and they'll have like an oscillator. And they'll say, when it's on this side of the moving average and the oscillator does this, you buy it. Okay, or this candle does this, you buy it, blah, blah, blah. And, I conducted a back test and it's 80% accurate, blah, blah, blah. It's all nonsense. All of that is nonsense. It's not 80% nothing, okay? The back test is incorrect for one because you need to do a random back test. I'm not going to explain all that, but you can't just go back 100 trades and think that that's an accurate back test because there's no guarantee that the environment that you've just had taken those trades in are going to be in the future, right? The environment changes. So the point of the reason why I'm tying this into the ebook is because when you have a sense of context, because you're pulling particular pieces of information, certain clues from the chart, you can see through strategies like that, or you can even try to use the strategy and have the context act as your guide to better shape the decisions. So maybe the strategy gives you a signal, a buy signal, okay? But that buy signal, if you have a sense of context, that buy signal may be at a major resistance area. Why would you take a buy signal at a major resistance area? That doesn't make sense. But the system is 80%, so you should take it, right? No, you shouldn't take it. You shouldn't buy at resistance levels. But if you had a buy signal at a support level, a major support level, and that all lines up, well, that makes sense. But what made you make that choice? It wasn't the strategy. It was the context, right? That's the value of the ebook. Anyway, so thanks for asking about that. I've been meaning to mention that. So you have to understand, this game, everyone wants a magical strategy, the magical thing that's going to help me make money all the time. There is no such thing. If you have context, you can basically apply many strategies. You want to use a moving average? You want to use an oscillator? Fine, you can, but you need context to basically filter out all those trades. And even then, it's not going to be perfect, but it's at least going to help you be more confident with your decisions and, more importantly, define your risk specifically. So you could say, okay, and I'm talking short-term trades here. I'm not talking about investing. But when you know your risk and you say, okay, this is where the market should not go, this is where the market should go, okay? And then once you're in the trade, it's up to the market now to either go with it or it doesn't, all right? And then if it gives you early warning signs to get out, you can make an adjustment, but you need to have the confidence to do that. If you don't, you're going to second guess, you're going to hope, and you're just going to get stopped out all day. Anyway, okay, enough of that rant. Thank you for mentioning that, Andre, and I'm glad the ebook has helped you. All right. Let me see what else. Mike. Okay, no problem. Your mannerism is right. Let's see. Oh, well, I'm glad. Thank you, Mike. I appreciate that. Well, I'm happy when I'm teaching and I'm talking to people from all over the world. It's always exciting and fun. for me. Okay, Ying. I would like to understand when the price increased to a resistance level, do you just take some profits and leave it? Or do you also buy more if the price is possible? Okay, Ying, good question. So Ying, what you're talking about is basically, do you put on more? Do you add to the position when something is working for you? That's a very tough choice. It's a very tough decision to make. One thing that you have to define first is what type of trade is it? If it's a swing trade, then no, I do not add, because here's why. Let's use Bitcoin as an example, because Bitcoin is basically turning into a swing trade, right? This is a possible area. If you're very aggressive, right, this would be a long. So let's say you're long at 43,580. Let's say 43.6, right? You're long, and it goes and it breaks. It goes 4,000 points, okay, and you're fooling around now at 48. You start taking something off the table. Why not add more? Well, because now buying up here at this resistance is a lot more, it's a lot of risk. Where are you going to put your stop? Is there going to be some structure before that maybe you can put your stop at? It's too complicated, right? That's why I'd rather not get involved in that. When you're in a swing trade, things need to be simple. So I don't add to those, like in those situations. When it comes to putting on more, it's easier to do it as a position trader or inventory. So, for example, let's use Bitcoin again as an example. Let's say you buy, you're thinking inventory now instead of swing trade. Remember, inventory is a completely different mindset. You're not going to use a stop for inventory. You're going to use protective sizing. You're going to size appropriately so that if Bitcoin gets hammered, it's not going to be very painful. So let's say you buy a fraction, you buy, I don't know, 1/16 of Bitcoin here, or whatever you want to say, $100 worth, whatever, right? Let's use $100 worth. And you have $1,000 to invest. You're buying $100 here. Now, Bitcoin breaks out, okay? Bitcoin breaks out to 45K. And you want to add another because it looks good. Hey, why not add another $100, okay? Again, it's only $100. If Bitcoin pulls back, yeah, that $100 is now going to be shrinking, but you're still long from a lower price, right? So now you have an average price. So when you're playing the averaging game, which is basically a dollar cost averaging, yeah, you can add on those breakouts when things, especially when the structure is going in your favor. Think about if you had done that, just looking back, if you were doing that in this type of situation where the structure just kept going and going and going your way, if you were just buying bits and pieces along the way and you kept putting on more and more, well, your position is increasing and whatever. But you're not getting so big that if it turns on you in a hard way, you get wiped out or you get yourself into a tough position, right? That's the whole thing. Inventory is hard to play with a small account because people want to make a lot of money. And they see, Bitcoin moved 20,000 points and I only made, $200. But if you have $1,000 account, that's 20%, right? But $200, I can't even buy lunch with that. Well, you need more than $1,000 account then, right? So just some perspective with that. Anyway, I hope that answers your question. Let me see what else I got here. Thank you for asking. So again, it's really a function of your specific strategy. Okay, XX, if Cardano follows Bitcoin and Bitcoin has that high candle as a buy signal, wouldn't it be within reason to think that soon Cardano will have a similar? Well, okay, good question. In that case, would you advise to buy now Cardano? All right. So here's the thing. You're looking for the catch-up game, right? So if Bitcoin is going, Cardano should follow. But I don't look at it that way. I look at it as if Bitcoin is going, Cardano should have gone. Cardano should be doing better, not playing catch-up, right? That means that if Cardano is slow to get in the action and Bitcoin turns, right, we get the fake out over here. Now Cardano, which was acting relatively weak, meaning, Bitcoin starting to go, Cardano's a little slow to get itself going. Bitcoin gives you the sell signal. Now Cardano gets hammered, right? That's called relative strength or relative weakness. And we look for that in stocks all the time. That's what you have to watch for. Don't think, now there are times when, yeah, sure, you get that delay game, but it's so inconsistent. So I'd rather, if I see Bitcoin doing this, Cardano should be giving me a similar thing and should be acting in a similar way. I'm not expecting catch up. I'm expecting similar or better, okay? Because as soon as Bitcoin turns, I'm expecting Cardano to, especially if it hadn't really gone anywhere, then it's in a position to turn faster because it's weaker, right? That means no one bought it, and now everyone's going to sell it if Bitcoin turns on you. I hope that makes sense. Okay, so thanks for asking about that. It's a good question. Okay, Yin, many thanks for your previous answers. I really like your video. I appreciate that. Remember when you talked about keep it simple rules for price action? Totally agree. But do you use volume? Okay, good question about volume. I get that all the time. Questions about volume. Oh, look, the scammer. Can you chart Bitcoin on the 4-hour time frame? Sure, the scammer. I love the scammer, as long as he's not scamming me. All right, so I'll take a look at that in a moment, the scammer. But Ying, so volume. I don't use volume, and here's why. Again, people always talk about volume and blah, 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 blah. Volume doesn't really help. It doesn't really give me any useful information. And the reason why it doesn't, you would think, well, why it should, right? It's an actual record of the transactions and blah, 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 but it's not an actual record. I don't know what the true volume is, for one, so it's useless. I can get a better sense of fake outs and all that kind of stuff from the price itself. Volume is not going to help me because, again, there are ways to hide volume, all right? And so we don't know if a big transaction is taking place. Do you think you're going to see it on like the Coinbase order book? Like if there's a big player, okay, let's say a big retail player who knows what he's doing, and he wants to buy, $5 million worth of Bitcoin. Do you think he's going to go on Coinbase and put a bid for $5 million worth of Bitcoin? And no one's going to show their hand like that. So what are they going to do? They're going to break it up into smaller pieces or hide. They can hide the orders, right? And a hidden order, I don't know if they actually show up in the volume. But anyway, I've never found volume to be accurate. It's even worse in the stock market. So my point is this. The candle will show me. And if we get, all I need for the fake out is a bearish pin bar to show up right here in this area. It's a resistance, right? So part of it has to do with the level. Is this a level where a fake out is likely? This level is, okay? This level is likely for a fake out because it's a resistance. And people have sold there before. I could see that on the chart. So if I get the fake out here, right, I would, first of all, I would be anticipating or prepared for one. If I'm long and I see the fake out develop, I need to make an adjustment. Now, I tell people this all the time. When I see the bearish candle developing or the sell signal, I tell people you have a choice. You can get out now, take a small loss or small gain, whatever it is, or if you want to wait for the stop because you have a stop set somewhere, you can just hope for the best and see if it goes to your stop. Like I always say, hope is not a strategy. A lot of times the market will give you an opportunity to get out earlier. You have to have the confidence to get out. Now, there'll be times when it fakes you out, you got out, and then it fakes out again and goes the way you thought anyway. That's going to happen, right? Markets are highly random, and there's no way to make that perfect. But by getting out, at least you're cutting the risk, right? You can always get back in. So I hope that answers your question. That's why I don't use volume. I think it's, again, it's another piece of useless information that I have never found to give me any type of more accurate read. Let me give you an example of something. Because, we all look at charts, right? And any fake guru, any guru that you follow on YouTube or TradingView or wherever, everyone's focused on the chart. Look at my magical moving average. Look at my magical oscillator. I have secret settings. And if you subscribe to my thing, I'm going to give you the secret settings to my oscillator. Yes, don't tell anyone it's a secret. Right. There is no advantage to any of this information. Okay? If it's publicly available, like volume, like a moving average, an oscillator, right? All these things. There's absolutely no advantage. You cannot beat the market using any of this stuff. Here's another example. So, and maybe you might be familiar with this, I don't know. But if you ever go to a casino, there's a certain game called Baccarat, right? It's the game of the original James Bond. And Baccarat is supposed to be a 100% random game, right? The outcomes are supposed to be 100% random. Meanwhile, you see people at the table, they let them draw charts on a piece of paper, right? I could never believe this. Like, they can draw charts. They're allowed to chart the outcomes on a Baccarat game. Like, why would you do that? Why would you chart in the casino? Here's a pencil and here's a piece of paper. Go ahead, start charting. If the casino, if that gave them any type of advantage, the casino would not let them have a piece of paper, okay, and a pencil to chart the outcomes. Meanwhile, the outcomes are random. What are they charting? Right? They're just, I guess it's just gambler's fallacy or whatever, right? Whatever that is. The point is, the charts that we look at here are similar, right? Most of the stuff we look at here provides no advantage. Do you think an MIT graduate with a financial engineering PhD or something like that, do you think they're sitting here struggling with, the volume on the chart here and this moving average and this oscillator and blah, blah, blah? No, they're not, because they're playing a different game, okay? They're playing a game that we can't even see. They're on a different level, all right? It's not that it's easier or anything like that, but I talked about it the other day. If you're an MIT graduate, like, why, if these guys haven't had any advantage just by having that type of education, let's just say you're a math scientist, okay? You're a math genius, and you have this education, and now you have some application to the market, and you're a programmer. Why would you have to work for someone? Why wouldn't you just raise some money from your friends, okay, family, whatever, get a couple of $1,000s together, put it in a Forex account, because, according to the Forex experts, there's quadrillion dollars in the Forex market. That's all there for you to pull out easily, right? So why wouldn't they just put a robot together, an algorithm, and just pull money out all day while they sleep or they hang out or play video games, right? Why? They have the knowledge, they have the programming ability, and it's their robot. They're not selling it to anyone, right? Why can't they do that? No, they have to work for a market-making firm. Yeah, they get paid a lot of money, but they have to work. They have to, go through all that stressful stuff. They have to write programs. They have to do this. They have to do that, right? Because they have no advantage like anyone else. They have to play the market-making game, right? They play a different game, and they need the resources of their market-making firm to have their strategies produce anything significant, right? So even with all that knowledge, they have no advantage. There's no advantage. So as a retail trader, how do we compete? What's the point of this? Am I discouraging all of you to just stop trading and give up because there's no money to be made? No, that's not true either. Markets are highly random, but they're not always random. What's missing in this game from most people is just patience. Patience is actually a simple thing, but it's very, very hard to employ. We have to wait for certain situations where probability is slightly more in our favor and the risk makes sense. It sounds easy the way I explain it, but it's very hard to do consistently. That's it, okay? So charts can help us identify those potential situations, but we need to be able to identify them in advance. So for example, this level right here, I talked about this level. You watch previous streams, analysis that I've done on TradingView. I talked about the 40K level, all right? That was the level to anticipate. Now, what does that mean? That means you shouldn't be shorting it, right? I'm just giving an example here. Shouldn't be shorting it, should be looking for longs. And that, so far, that's what's playing out here. The probability around this level favored the long side, while the structure was conflicting and favored a support break, okay? So one of those things is going to have to win out, and you have to take a chance at, with incomplete information. Like a poker player, you have to take a chance to see which one plays out. This support could have broken, and we could have been at 37K, but instead, we got the long, okay? So with the possibility of the support being broken, should you short it? And here's the answer to something like that. Because again, this goes back to, should we even bother doing this? Is there any point in trying to make money in something that's so random? Well, yes, because here's the thing. If you're a day trader, you have a lot more opportunities to take some money out of this area. It's not going to be a lot of money. It's going to be small bites. But the thing is, you're positioning yourself for the possibility that the support breaks. And if it does, great. You get some piece of the action. If it doesn't break, you get out and you take a small loss. And now it's a long. So now you adjust. Okay? So that's the mindset of constant adjusting and constant adapting to new structures and being prepared for structures to change. Not thinking in absolutes and thinking, oh, okay, it has to do this. Never say that. Never use a sentence in the market like that. It has to do this. It has to do that. The market doesn't have to do anything. Okay, it's going to do whatever it wants to do. What do people do? They grasp for news. News. Yeah, the situation in China with the housing company, or the situation with the U.S. government and infrastructure. It's all nonsense, right? The market's going to do what it's going to do anyway. So focus on the price, because it's pricing in all of this information. It's what's the word I'm looking for? When I mean pricing in, I can't think of the word. Anyway, but the point is, price knows all the information and it's adjusting to it in the world, because large players have the information before everyone else, and they're going to take action with their money, right? And with that action, price is going to behave a certain way. Now, there has to be someone on the other side of those large players who know what's really going on. Who do you think is on the other side of those trades? The retail traders, because they don't know what's going on, okay? The only chance we have is by focusing on the most truthful information, which is price, and then knowing what context, how to judge that information in some sort of context. And then from there, we can identify opportunities and risk. And then at that point, we can adjust and decide if the risk is appropriate for us or not. If you're reacting to things, you will never win. You will win on occasion, like a slot machine. But other than that, over time, you will never win. You will give up, and someone will replace you. Someone that gets sucked into the dream, or they're lured in by the hope or whatever, because some fake guru on TikTok told them that they're going to retire on ADA or something like that, and then they will lose their money, and that's how it goes. Okay, anyway, what a long rant that was. I got to stop talking. I talk way too much. Okay, so anyway, I think I answered everyone's questions. See, Ying, you got me into that rant there. Man, I talked for like a half hour. Okay, the scammer wants to see Bitcoin. I could have had the 4-hour chart here the whole time. The scammer. So look, the 4-hour chart. Let me just do this real quick. This is more appropriate for day trading, by the way. Okay, something like a 4-hour chart. And you can't make swing trade judgments on this. It's a bad idea, because things can change very quickly on this chart. That's why I don't mix the two. If I'm going to use a smaller time frame for a swing trade, I'll consider a 12-hour chart, maybe an 8-hour chart if I just need to see some more detail. But this 4-hour chart, let me just show you how it can mislead you. Right? This situation right here is a resistance, right? This area right here. So as a day trader, I would be interested in an aggressive short, because again, you're going against the structure here. It's aggressive, but perhaps you're only looking to make 100 points or 150 points or something like that, because that's all you can expect to make on something like this. If you're trying to go for like a big move, like, this thing is going to go back to 39K and I'm going to be short the whole thing, you're asking for a lot of trouble. Okay, so so for a 4-hour Bitcoin, yeah, there's not much to do here. If you're trying to play the bigger picture, look, your support is right there anyway, right? And it needs to hold that. But keep in mind, a 4-hour chart on something like Bitcoin is going to be very noisy. And this support may break by, 100 points or something like that. And then you get one of these situations where it reverses right back in your face. It's very random. So, that's some of the stuff that I see on a 4-hour chart. You can apply all the techniques that I use on a daily chart. You can apply to a smaller time frame. You just have to understand the limitations and the context, okay, of that. That 4-hour chart, by the way, is only basically like this portion of the candle or whatever, right? So that's why you have to be careful with that. Anyway, all right. So I hope that answers your question. The scammer. All right. On the chart, Andrew said he wants Bitcoin to turn back as it at the 44K resistance level. Same for altcoins. Do you have the same opinion? He wants it to turn back. So, well, I understand why he would say that, because again, this is a tough spot. It looks good if it can keep going, but you're at a resistance, right? So what he's looking for is what I basically said earlier, a higher low of some kind or some sort of little mini test, like an inside bar. Perhaps you get a red inside bar that fails to go lower, and that will give us a better reward risk, okay? A lot of times, if Bitcoin is not in a full-blown trend, which it is not right now, it's trying to change, then often you will get noise, okay? Like this kind of price action over here that we have, over the previous week, noise. So it's very possible for this candle to fool around inside of this area, and that's why there's no hurry, there's no rush to get into this, right? And on top of that, if this resistance is not cleared today or tomorrow, if that 45K is not cleared, then this is nothing but a noisy lower high. And I would expect a test of 40K again in that scenario if we get something like that. Okay, so again, it's always about adjusting and not reacting. So you can, like I said before, you can go for something like this long because there is a long signal there. You have to understand the risks and you have to understand what can go wrong and be prepared to adjust. Now, one thing I would not do is short this thing. Even we don't short it anyway, that's just something we don't do. But if this was a market that I was into shorting, I would not short this at this level. This is a very, very risky area to be shorting. As you can see, I'm sure there's some shorts that are caught in this thing, okay? Because they followed some TikTok guru. All right, let me see what else we got here. Okay, Chris, all the information, yes, right, Chris, that's what I mean by priced in. All the information in the world is priced into the asset right now. Okay, that's what that's called, by the way, is price. It's a discounting mechanism. That's what that's called. That's one of the first things that you learn when you go to get your chartered market technician designation, right? CMT. One of the basic tenets of technical analysis is markets or prices in all known information in the world, right? Price is a discounting mechanism. That's very important because without that concept, without that idea, technical analysis would be a complete waste of time. Okay, and in that case, then we would be like the guys that, in the casino with the little charts, charting on a piece of paper for no reason. But because we can rely on price for that reason, patterns that unfold as a result can provide some sort of value, right? But it depends. It all depends on the context, and that's really what you have to get good at when it comes to analysis. But you could be the best analyst in the world and still not be able to make money trading. Because trading requires a different set of skills, okay? People always mix up the two together, right? So you take some kind of training program and they'll be like, yeah, I'm gonna teach you technical analysis and trade strategies. Yeah, right, okay, great. But analysis and trading are two different things. Analysis is one thing, trading is about risk. Analysis helps you define the risk, but trading is about actually taking the risk and adjusting as the risk changes, because everything changes. All right, anyway, man, I'm talking too much. I'm just like losing my mind here because I keep talking. But I think that's pretty much it. I answered everyone's questions. I think so. If I missed your question, please ask it again, but I think I got everyone's stuff here. All right, I appreciate everyone listening and pressing the like button and all that other stuff. Does anyone have any other questions that I can go over? The scammer, was my 4-hour chart adequate? Was that a good perspective of the 4-hour chart? I look at smaller time frames, but it's for, it's not for swing trade purposes because again, they're not very helpful in that area. Okay. So if I don't have any other questions, let me just leave you with this. Okay, cool, Andre, cool. Yeah, I know, the scammer. Oh, yeah, I had a few of them earlier too. I'm always in rant mode, especially when I see these TikTok videos. They drive me nuts. They really do. Have you gone over gold? Yeah, Chris, I went over gold earlier. It's one of the main markets that I cover. If you go back to the beginning of the stream, probably about 15 minutes in or something like that, I talk about gold and the dollar and all that stuff. But again, that whole situation is a function of the dollar. And while gold looks similar to this Bitcoin situation, I would be very careful. But I mentioned the stream. Just go over the stream and you'll see it there. So again, I just want to say this. A very common problem that I see, and I get questions about this and all that kind of stuff, is people reacting. They're still reacting to stuff that's in front of you. You have to understand, that's the way we're brought up. I mean, it's human nature to react to our environment, our physical environment, because that's the way things are, right? When you have a baby and the baby's hungry, the baby cries, right? And then you feed the baby. So now the baby has learned that, by reacting to this feeling of hunger, by crying, some sort of result is made, right? You get fed, hopefully. And that's how you start to put logic together, okay? If this, then that, okay? If I cry when I'm hungry, I get fed. So as we get older, again, our environment, don't touch a hot stove. Why? Because it's hot, right? So you touch it and you learn that it's hot. You react. Okay, markets are not like this. Markets are random. On top of markets being random, right? Not always random, but mostly random. So that means if we're reacting to things, we're reacting to noise. We're reacting to random nothing. On top of that, you pile in information because, again, we use logic to determine things. So we listen to news. We listen to TikTok people. We listen to other experts and gurus. I mean, you're listening to me, but I'm trying to tell you, the key here is you cannot react. In the market, we cannot see what is ahead of us. We cannot see a true order book. We cannot see, like, for example, and I've mentioned this before, Bitcoin, there's a resistance in this area right here, right? We know that. We cannot see if there's a gigantic order sitting there. Okay, we can't really see. If there's a $10 million Bitcoin sell order sitting here, all right, we can't see that. The chart's not going to tell us that. We're not going to see that in the order book. It's hidden from our view. But if that is there, or if there's a lot of people that have sell orders there, price is not likely to break through, right? Then any buy orders right now are going to get absorbed and you'll see the price pull back. We can't see that. So we cannot react to that. Right? So we need to guess, and we need to be ahead of the game. We need to anticipate. So remember that word, anticipate. All this work that I do here on these charts during these sessions really revolves around one thing, and that is looking at levels, looking at structure, so that we can anticipate some type of outcome. I've talked about Bitcoin double bottom, blah, 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 at this level, because I'm anticipating this type of outcome. Okay, while everyone else was too busy reacting to this, right? They're reacting because all they see is a red candle. Oh, lower high, a moving average, this, blah, blah, blah. We're going to break 40K, blah, blah, blah. And we don't break 40K. So that's the objective here, is learn to anticipate. But again, anticipate doesn't mean jump ahead. It just means be prepared and then let the market prove itself. Okay, that's not always easy to do, but that's the second part of it, is you have an area where you're anticipating something. Now let the market prove it. Okay, and then once the market starts to show its thing, that's when you can start measuring risk and decide, okay, I'm willing to take risk here. It's aligning with what I anticipated. You're no longer reacting at that point. You are now in line with, the market's now aligning with what was likely to happen in this area, right? So that's the thing. Reacting gets you into trouble, and people do it all the time. I mentioned this rant again because I get a lot of questions about this, especially when you see a big bearish day, okay, or even a big bullish day, or something goes vertical. People react. Oh, look at ADA, or look at this one. It's making all new time highs. What do I do? Nothing. If you're not in it, you missed it. Okay, you wait for a better level. Don't react. Okay, so I'm going to leave you with that because I talk too much, and I just like to talk. I just like to talk. Okay, hold on. Let me see what else we got here. Thanks for everything. Wait for Andrew to issue a new trade. I lost about 5% of my portfolio when Bitcoin went to 12K. And I don't want to do anything stupid. Okay, no problem. Well, look, X, it's not a problem. You just wait. And even if you miss a move, it's better than losing, right? And I've missed plenty of moves, but I'd rather miss a move than be in something that I don't want to be in. Okay, Elizabeth, I wish I could find an 8-hour or 12-hour, but it's $. Okay, I'm not sure what you mean by that, Elizabeth, but okay. So I'm waiting for over a month for another swing trade. I'm in waiting game. Hey, X, no problem. Nothing wrong with waiting, because eventually something will come along that lines up. Waiting if you can wait and you can wait good, you'll do better that way than just jumping into everything. Especially this previous month was a tough month because stuff was all over the place, and I'm sure a lot of people got hammered because they can't wait. So no problem with waiting. No problem at all. Don't feel bad or fault yourself, even if the market starts to go your way. I mean, how many times did this thing try to go somewhere? What if you bought it up here? Okay, what if you bought it over here? Again, all that requires now taking pain or getting stopped out. So a lot of times by waiting, you're going to miss a lot of would-be stop outs. People usually don't appreciate that. Okay, so thanks for mentioning. Hey, Ying. Just be curious, do you put stop loss tighter in the night during the sleep and then move it? No, actually, a good question, Ying. No, I mean, I put my stop loss, if I'm like, for example, something like Bitcoin, if my stop was here, okay, something like that, and my swing trade is set and I'm in it, let's just say, I don't do anything from there. The stop loss stays there and I don't make any adjustments, whether I'm sleeping or whatever, because the stop loss is there. So the only way I'll move the stop loss is like if the trade happens to do something spectacular, like go vertical, and then I want to start doing like a manual trailing stop, but it's rare that I do something like that. And also it's very hard for us to share, like we can't send out text messages to move stop loss orders and all that stuff. It's too cumbersome. But the point is, no, I don't move the stop once it's in, unless again, something goes spectacular, which is not common. Usually, like I have my limit orders to get out, and that's it. The market either goes to those limit orders or, I'm getting out earlier, something like that. That's usually how they go. Okay, so thanks for asking. Okay, all right, no problem. It costs extra. Oh, Elizabeth, it costs extra on TradingView? Oh, I didn't realize that. I could find an 8-hour or 12-hour. I didn't realize that. Maybe because you're limited on the time frames. Yeah, I have the full version, so that's why I don't realize. I always think everyone has the same version. I didn't realize that the less versions have limited time frames. But hey, you know what, Elizabeth, you're not missing anything. Okay, you're really not. The only use that I find for a 8-hour or a 12-hour anyway, for swing trades, the best use that I find for it is when it comes to really trailing a stop, like I just talked about, because you could find more minor levels to trail from, or just more detail to trail from. That's it. Okay, so you're not missing anything. Okay, less is more in this game. I always say that. Less is more. The less information that you can make a decision on, the better. More is not better. All right, not in this game. All right, anyway, I'm going to leave you with that. I got to go, because you know why? You people will have me here talking the whole day. And I know in some countries it's like midnight, and some of these people need to go to sleep. Stop listening to me at midnight. Anyway, all right, so I want to thank you all again for taking the time to listen to me today. I hope I've answered all your questions to your satisfaction. I want you to join me for the next one. Hopefully I get back on TradingView on Monday. I try to stream 2 days a week. Also, if you haven't checked out the links in the descriptive portion of this video, the show more thing, just click on that. You could see we have a few things going on there if you're interested. All right, so other than that, thank you for listening. Enjoy the rest of the day or the rest of the evening, wherever you are in the world, and thank you for watching.